So if you're curious about what's going on in Ottawa real estate, or if you've just been dying for my 3 takeaways for the things we're seeing in the market right now, you've come to the right place. This is your August 2023 Ottawa Real Estate Market update. Now, before I get into it, I promised my cameraman Andrew that I would try to keep these updates to less than like 15 minutes, because I know they tend to run on for a long time. I tend to talk a lot. I'm doing it right now. So I'm gonna try to be more concise with this one. So without further ado, let's launch right into it. These are the stats for July 2023 for freehold sales in Ottawa. All right, now if you want to look at the stats a little longer, they're all going to be in the description to this video, but in general, here's what we're seeing. So overall, freehold sales volume for the month of July was very, very low. We actually failed to break 1,000 total sales. That's the lowest sales total we've seen in a month of July since July of last year, where we just barely broke 800. Historically, however, these 2 months of July have been outliers. Usually we sell a lot more homes than that in July. In spite of the really low sales totals, prices held firm in July. We're a little over a 752K average sale price. Actually, the first time we've broken 750 all year, but for all intents and purposes, prices for freehold have basically been flat since the month of April. Now, if you remember last year, sales really dried up in the second half of the year as we got just bludgeoned with interest rate hike after interest rate hike after interest rate hike. And then the market started to really heat up again once it was finally announced that interest rates would remain frozen for a time. And now that interest rates have started climbing again, right? We've had 2 hikes in a row. We're starting to see the same pattern as last year, where volume is just drying right up. The other thing that I found interesting about the freehold stats for this month was inventory levels. Now, if you remember, inventory is, Andrew, what is inventory? It's a measure of supply and demand. We're sitting at 2.7 months of inventory, which is still a relatively low number. But in the last 2 months, we went from 1.6 months of inventory in May to 2.1 months in June to now 2.7 months of inventory at the end of July. So what that tells us is that for the last 2 months, supply has entered the market at a far greater pace than we're seeing demand. Right? That's good news if you're a buyer, not so good if you're a seller. Last but not least, we ended the month of July with 2,677 active listings. That is the highest total for the month of July that we've seen in the COVID era, but it's still a relatively low total when you look at pre-COVID. All right, so that does it for freehold. Now let's take a look at condos. All right, so once again, we're gonna put the condo stats up. Boom. I'll remind you that they are in the description to the video if you want to pay a little more attention to them. We're basically seeing the 2 major trends in condos that we were seeing in freehold, which is that sales volume was the lowest we've seen in a long time, with the exception of July of last year, where volume was even lower. Condo inventory also jumped significantly from 1.5 months at the end of June to 2.4 months at the end of July. Again, 2.4 months of inventory, still a pretty low number in a vacuum, but much like freehold, we're seeing condo supply enter the market right now at a greater rate than demand as of late. Last but not least, average selling price of condos was also down to 433K in July from 452K in June. That was the high water mark for the year. We've dropped about 4% month over month, but condo selling prices have kind of stayed within that 430K to 450K channel since April. So again, fairly flat. We're at the lower bound now. Be interesting to see if prices rebound a bit next month or if they continue to drop. That does it for the stats. Now let's get to my takeaways. First takeaway, things I'm seeing in the market, we're seeing a really pronounced difference in inventory across pricing segments. If you remember in an earlier video this year, I kind of talked about this. When the market was really slow at the beginning of 2023, I had mentioned that we were seeing really different markets across price segments, right? For freehold properties in the entry-level segment, which I would qualify as like 700K or less, homes were selling very quickly, and it wasn't all that unusual to see properties receive multiple offers. And then in the luxury segments, the higher price points, things were barely moving. As the market began to heat up throughout the beginning of this year, around March, we saw things kind of start to normalize around the price segments. However, now that interest rates are once again on the rise, the market once again appears to be entering this sort of cooling period, and we're starting to once again see very, very different markets across different price segments. So if you're shopping right now in the 700K or less segment, you can expect a lot of competition. There's still only about 2 months of inventory total in that segment. The good properties are still selling quickly, and they're often getting multiple offers. In the luxury segment, however, which I classify as about 1.25 million and up, we're seeing a very different story. We're sitting at 6.8 months of inventory, so almost 3.5 times what we're seeing in the lower price points. And things are moving at a much slower pace, if they even move at all. Right? So whether you're a buyer or a seller, you should really be tailoring your expectations right now, and more importantly, your strategy to the segment of the market that you find yourself in. That takes us to my second takeaway, and that is that mortgages kind of suck right now. I know that everybody watching this video has probably heard from one of their elders about how these interest rates, they're really not that bad, and that back in the day, mortgage rates were 10%, 12%, 20% even, right? And that may be true, but back in the day, you could also buy a home for literally a fraction of what you pay today, and salaries have nowhere near kept up with housing prices in Ottawa, in Canada, and quite frankly, in most places around the world. So I was speaking to a mortgage broker the other day, someone I do a lot of business with, and I asked him to run some numbers for me. And what we found was pretty shocking. With interest rates where they are right now, a person who makes $100,000 a year in salary and who has a 20% down payment saved up with no debts other than a car payment of $500 a month or less, right? The max purchase price that that person would qualify for right now is $475,000. And again, that is total purchase price, including the down payment. It's not mortgage, it's purchase price. $475K doesn't get you a whole lot in Ottawa these days. You're basically looking at a condo townhouse in those numbers, and you're living in the suburbs, right? So you're making $100K a year, which is still a very good salary. You've got close to $100,000 in the bank. You've got great credit and no real debt, and the most you can qualify for right now on your own is about $475K. That takes me to my third and final takeaway. The silver lining to this otherwise very bleak example is that this is yet another reminder that real estate continues to be a fantastic, borderline unbeatable long-term investment. Yes, I understand that affordability is in the trash right now, but if you can find a way to own your home rather than rent it, even if that means having to make some serious compromises on the type of home you buy, I'd say it's a very safe bet that you will end up way ahead financially in, say, 5 to 10 plus years compared to you would have if you had rented your home for those 5 to 10 years, right? One of the things I find myself saying a lot lately to first-time buyers is that your first home is almost certainly not going to be your dream home. It might not even be close, but for 99.99% of the population, if you don't ever buy your first home, you're never going to get to buy your dream home. And that's because the market just tends to increase at a rate that outpaces what the large majority of people are able to save, especially in this environment where everything is super expensive. I know, of course, the realtor is telling you to buy real estate. How original, right? You don't have to take my word for it. We literally have decades and decades of data to back up what I'm saying here. I wouldn't worry too much right now about trying to time the market, especially in a city like Ottawa. I don't mean to make light of what is a very, very trying time now for a lot of people. I know we're all feeling it, but I genuinely believe that those who can find a way to own real estate, doesn't even have to be in Ottawa, will end up much better off in the long run. I always say you're gonna end up paying someone's mortgage one way or another. It might as well be your own. All right, so that about does it for this month. I hope you found this insightful, and once again, hopefully it wasn't too grim for you. If you have questions about buying, selling, investing, if you're just curious about the real estate market in general, you can access my calendar directly to book a discovery call with me using the Calendly link in this description. As always, I appreciate you watching my videos. Thank you, and I'll see you next month. How we do? How long was that?
17 minutes.
Really? Fuck me, man. All right, next month.